A job cost sheet is a form used to record the cost chargeable to a specific job. It also determines the total and unit cost of a completed job. Assigning manufacturing costs to work in process results in debits to work in process inventory and offsetting credits to raw materials inventory, factory labor, and manufacturing overhead. Please note you will debit work in process inventory for both direct materials and direct labor, but you will debit manufacturing overhead for indirect materials and indirect labor. A job cost sheet is used to record the cost chargeable to a specific job. Companies keep a separate job cost sheet for each job. The job cost sheets are the subsidiary ledger for the work in process inventory account. The work in process inventory account is referred to as a control account because it summarizes the detailed data regarding specific jobs contained in each job cost sheet. Each entry to work in process inventory must be accompanied by a corresponding posting to one or more job sheets. In this example, we have 3 partially completed jobs, job number 101, 102, and 103. And the total for these jobs, $74,400, must equal the total or the balance in work in process inventory. A job cost sheet is an essential accounting record that accumulates cost for each job. As I stated earlier, this form is used to record the cost chargeable to a specific job and to determine the total and unit cost of the completed job. A completed job cost sheet helps managers to compare cost to those of previous periods as well as to its competitors. Companies assign raw material costs to jobs when their materials storeroom issues the materials in response to a request. Requests for issuing raw materials are made on a pre-numbered materials requisition slip. The materials issued may be used directly on a job, or they may be considered indirect materials. The materials requisition should indicate the quantity and type of materials withdrawn, as well as the account to be charged. In this example, job number 101 will be charged $1,000 in materials. The company will charge direct materials to work in process inventory and indirect materials to manufacturing overhead. When the company journalizes the requisitions, it debits the account work in process inventory for direct materials and debits manufacturing overhead for indirect materials. For example, if Wallace uses $24,000 of direct materials and $6,000 of indirect materials in January, the entry is to debit work in process inventory for $24,000 and debit manufacturing overhead for $6,000 and then credit raw materials inventory for $30,000. This journal entry reduces raw materials inventory by $30,000 and increases work in process inventory by $24,000 as well as manufacturing overhead by $6,000. This slide shows the posting of requisition slip R247 to job number 101 and other postings to the job cost sheets for materials. The requisition slips provide the basis for the total direct material cost of $12,000 for job 101, $7,000 for job 102, and $5,000 for job 103. After the company has completed all postings, the sum of the direct materials column of the job cost sheets, the subsidiary account, should equal the direct materials debited to work in process inventory, the control account, in which case the amount is $24,000. Companies typically post to job cost sheets daily and to the control account, work in process inventory, monthly. Companies assign factory labor costs to jobs on the basis of time tickets prepared when the work is performed. The time ticket indicates the employee, the hours worked, the account and job to be charged, as well as the total labor cost. Many companies accumulate this data through the use of barcoding and scanning devices. When they start and end work, employees scan barcodes on their ID badges and barcodes associated with each job they work on. When direct labor is involved, the time ticket indicates the job number. The time tickets are later sent to the payroll department, which applies the employee's hourly wage rate and computes the total labor cost. When the company journalizes the time tickets, it debits the account work in process inventory for direct labor and debits manufacturing overhead for indirect labor. For example, if the $32,000 total factory labor cost consists of $28,000 of direct labor and $4,000 of indirect labor, the journal entry is to debit work in process inventory for $28,000. We also will debit manufacturing overhead for $4,000 and credit factory labor for $32,000. As a result of this entry, factory labor is reduced by $32,000, so it has a zero balance, and labor costs are assigned to the appropriate manufacturing accounts. The entry increases work in process inventory by $28,000, as well as increases manufacturing overhead by $4,000. Let's assume that the labor costs chargeable to Wallace's three jobs are $15,000, $9,000, and $4,000. This slide shows the work in process inventory and job cost sheets after posting. Just like direct materials, the posting to the direct labor columns of the job cost sheets should equal the posting of the direct labor to the work in process inventory account. The solutions will be provided in another video.